All right, and we are live. So welcome back to Dapp University. So today we've got a lot to talk about in our live stream. If you are in the crypto space at all, there's an event today, or there's a couple of events that you definitely want to pay attention to. So I'm talking about this video today, why they are important. Okay, we're gonna look at a lot of other things that have happened in the space since yesterday. Again, we do these live streams Monday through Friday on this channel. Just subscribe, turn on notifications. You're gonna find out about those whenever we go live. We're going to, of course, take a quick peek at the crypto markets, answer some of your questions, and a whole lot more. So if you're new around here, hey, I'm Gregory, and on this channel, I turn you into a blockchain master. So if that's something that you're interested in, then smash that like button down below for the YouTube algorithm and subscribe to this channel. And if you want to learn how to master blockchain step-by-step start to finish, then head on over to dappuniversity.com/bootcamp to get started today. All right, so we got people jumping in the chat here. We got Technically, Kodia, Jay Lee, let's see here, Ugandan Crypto Guru, Dale, Tina, Aileen, Landon, Major, let's see, NF Street Crypto, Cryptechology, Daniel, welcome. All right, so let's go ahead and jump into this. So let's go ahead and talk about some important events to watch out for in crypto today. Okay, so right now, crypto is in this period where, we've been in this bearish period since the beginning of the year. Of course, we've seen a slight recovery. Recently, especially with Ether leading a lot of these rallies. I think Ethereum merge has a lot to do with this. But no doubt, a lot of the headwinds that we faced all year with crypto prices, dropping the way they have been, has been majorly impacted by the broader economy. Essentially, with crypto and stocks have been kind of headed in the same direction mostly all year, a very high correlation. Of course, crypto's had its own set of issues within the ecosystem, like the Celsius blow up, the Terra Lunar disaster, all that type of stuff. Okay, so that's for sure. But right now, one of the main points is that crypto is highly sensitive what's going on in the broader economy. Again, you can see this, as crypto and stocks both started going in the same direction after the Fed in the United States decided to essentially change the course of its monetary policy from one of expansion to one of essentially contraction, to do quantitative tightening, and also raising interest rates, which has a high impact on what's going on with the broader markets and their appetite to take on risk and all that type of stuff. So, one of the big reasons for this is that, we've been trying to fight inflation in the United States. Okay. I don't pretend to be any kind of macroeconomic genius or anything like that on this channel, but it doesn't take a genius to find out or to basically see that inflation is a problem, that these things are highly correlated, and what's going on with the broader economy and the actions of the central bank have a pretty big effect on the markets, especially right now. So today, we got a couple different things coming out that you want to pay attention to. Number one is what we're going to see. We're going to see the minutes from the Fed meeting that happened previously come out today, which could give us some clues into the direction that the Fed plans to head. Okay, which could have a pretty big impact on the overall direction of the crypto markets. Okay, another big event, we'll talk about that in a second. Another one is the retail sales. Okay. So, the two big things that people are worried about in the broader economy, of course, number one, inflation. The other is, what's going, like recessionary type behaviors, okay? Things that would indicate a recession. Of course, we've seen the 2 consecutive quarters of negative GDP print, which, most people use that to define a recession. Of course, we see lots of definitions changing before our very eyes with that type of thing. But people want to look at other clues to what's going on with the broader economy, to try to get some sort of signal on which direction the Fed might head with its monetary policy. So first thing we saw, this morning was basically that the retail sales really had little change, okay, in July as the gas prices fall, okay, and so have auto sales. So there's no real big change there. But the other thing I want to pay attention to that's supposed to come out today is the minutes, okay, for the Fed meeting. So basically, we're seeing a risk-off day in all financial markets, of course, in stock markets, also in crypto. We have high correlation to this. Let me pull up my screen here. We're seeing, red days across, especially like the NASDAQ 100, for example, which is a pretty high correlation to what's going on in the crypto space. basically, I'm trying to figure out what exact time this come out. So basically, we had the meeting for the Federal Reserve earlier. Okay, we saw the outcome of this meeting. Okay, but now we're actually gonna have the minutes get released, and we usually get some updated kind of perspectives on the minutes from the meeting that give us potentially more insight into the direction that they want to hit. So I think the big question in everybody's mind is that, do we see quantitative easing, or really just easing of the Fed policy in general, in 2023, or potentially even later this year? And could we take actions right now that would essentially indicate that at the beginning of next year? So the question is whether the Fed wants to use these minutes as a communication tool to push back against the view of a 2023 easing cycle. Okay, so that's sort of the language that people are looking for. If we see language in the minutes that tries to indicate, very obvious hawkishness, okay, and that could potentially indicate that type of thing. And if that were the case, we could see some volatility in the crypto markets, especially, or in other risk markets as well, because they don't like that type of uncertainty. Okay. So post-meeting rhetoric from the Fed suggests that's more likely to be the case, especially since the Fed funds future price policy rate being cut from 3.6% to 3.2% in the second half of the year. Okay. And like I was saying before, the meetings are really just a raw record of what transpired in the last meeting. But basically, some people, they could be tailored to anchor market expectations. Okay. But we're going to give more detail on that. So that could, we have that being released later today. I saw the UTC time, but I forget what the actual time is supposed to be in the U.S. Hold on a second here. Looks like it's 1 p.m. So let's just check out it. I can actually look on the Federal Reserve website. That's the nice thing, is they publish these things so you can actually see them. Yeah, so 1 p.m. Central, but that's 2 p.m. Eastern time. That's the meeting that happened on July 26, 27. So we could see some volatility either to the upside or the downside around this event later today. So definitely keep an eye out. So somebody says they got the YouTube notification 6 minutes late. Well, you could if you have a Twitter account, you can head on over to my Twitter. I usually tweet out in the morning, a few minutes before we even go live. So if you turn on tweet notifications, I don't tweet that often. So if you turn on tweet notifications, like, you're not going to get spammed. You're usually going to get a live stream notification. Maybe I tweet one or two other things that day. I think the most I've ever tweeted in a day was like 4 or 5 times, and that's like pretty rare. Okay, so let's look at a couple other things. So yesterday we talked about, what was going on with Ethereum, okay, and the possibility of, some censorship happening in the protocol itself, and how that could be not good for, the Ethereum space, that it could be a problem that it has to overcome. And I want to do a little bit of a follow-up on that discussion. So yesterday, setting the stage for this, basically yesterday I talked about how essentially we have this app, on Ethereum called Tornado Cash. It's a privacy solution for Ethereum, which has been sanctioned, okay, in the U.S. by the U.S. Treasury, okay. And essentially, it's illegal to use it if you are in the U.S. And now we've seen lots of other people, who are private, or maybe not necessarily private, but who are, corporate entities of some kind, okay, having to comply with these sanctions. Like, we've seen we've seen GitHub ban the repository organizations and accounts of the developers who contributed to it. Okay, we've seen we've seen people who run node providers. Like, if you're going to connect to a blockchain with your MetaMask wallet, a lot of times you're using Infura underneath the hood, or if you're a developer, you might have seen Alchemy. Okay, we've seen a lot of people basically blacklist the addresses which were provided by the Treasury, sorry, U.S. Treasury. So basically, like, the question is, how far do we take this? And there's been talk of censorship happening actually at the protocol level for people who run Ethereum validators, Ethereum nodes, to implement censorship actually in their node software. Okay, and how this could be a problem because there's going to be all these centralized staking providers who are going to try to run these nodes because a lot of normal people can't or won't stake. Okay, because you got to have 32 Ether in order to stake, or even if you got 32 Ether, you may just not want to run your own computer and lock it up into a validator. And so, the issue on the table is if we see a lot of people, who are trying to have staking businesses, who want to do this for other people because it's a lucrative business model, and that becomes a large number of participants on the Ethereum network, and they feel the pressure to comply with sanctions in order to keep their businesses alive, then essentially, like, you could see a problem where you have a lot of people trying to have censored ETH nodes. So I talked about that, how it could be a problem for Ethereum. I want to follow up on that with some more conversation. So want to talk about one potential thing that could happen here. So basically, people were asking me yesterday about this, like, what can you do? You know what I mean? And there's been a lot of talk among the Ethereum community of like the idea of social consensus. I think I even talked about that yesterday, some of the live stream yesterday. Essentially, like, so how Ethereum works is it's just client software. You know what I mean? It's just basically you download software on a computer to run a node that runs the network, and then essentially you are implementing the Ethereum spec, and it just knows how to talk to other nodes and run the blockchain itself. But basically, like, I mean, who's in control of that software? Like, somebody could come up with a new Ethereum upgrade and then convince everybody to run it, and that's how it will work. Okay, but that's kind of the idea of the social consensus layer, or the layer that goes even deeper than the layer one blockchain itself, which is the values and the ideas of how the blockchain should work in the first place, and then those get translated into code. Okay, so among this sort of social consensus layer of the Ethereum community, there's this idea that essentially, Bitcoin has this too, and Ethereum also is going to have this, or does have this, where essentially you can have this thing called a user-activated soft fork, where, if somebody tries to do something with the blockchain itself that the community doesn't like, then the blockchain can actually have a user-activated soft fork. Okay, so this has actually happened before in Bitcoin's history. Okay, and this is Eric Wall was talking about this. He was one of the people that I kind of brought up whenever we were talking about the initial problem potentially for the Ethereum community. So basically, as the Ethereum community gears up to prepare for its user-activated soft fork defense, forced to any validator to think thrice before handing over to OFAC, there's going to be a lot of snark from Bitcoiners. So basically, it's envy. User-activated soft forking, the corporates is still the most exciting thing you can do in crypto. So basically, Bitcoiners had their user-activated soft fork moment in 2017, and it's their proudest moment. So he says he's a Bitcoiner, he's his proudest Bitcoin moment. The idea that Ethereum would be even close to achieving something similar is the most annoying thing could happen. So there's a lot of like rivalry here with the Ethereum people and the Bitcoin people. Yeah, you kind of you can see beyond that. I'm in both the ETH and Bitcoin camp, but there's a lot of rivalry online, and he's kind of sarcastically joining in on that. But anyways. So basically, the entire Bitcoin rhetoric relies on the reason that they were able to pull off their user-activated soft fork is because users ran full nodes, the basis for the entire design philosophy. So basically, it's true the ability to run a full node is useful and a user-activated soft fork, but annoyingly, Ethereum can still pull it off. So first of all, Ethereum users can run nodes, and even if the default is to sync using state commitments, that doesn't mean you can't enforce a user-activated soft fork. You can, of course. So basically, the outcome of a user-activated soft fork is much more a market phenomenon anyway. So anyways, you'll still win a user-activated soft fork just by demonstrating superior pricing power. Basically, all the things are narrative violations for Bitcoiners. Of course, Ethereans should not be able to use user-activated software. That's the core Bitcoin. But anyways, I'll put a link to this down in the live chat below. There's a pretty good thread you can read through to kind of see some of the comments here. There's a lot of there's a lot of jokes in there. It's you gotta read it for what it is for sure. But yeah, that's a potential answer to what's going on here. Of course, we're seeing all kinds of drama ahead of the Ethereum merge. This particular problem is unique to this moment in history because Ethereum's never been proof of stake before. It's never had this problem until now. And it's crazy perfect storm that we just saw the OFAC stuff pop up right before the Ethereum merge. Okay. So it's you could see some choppy waters ahead, especially right now. And not to mention that, we've got the potential Ethereum fork, the miner-led proof of work fork, to try to, make ETH go off into its own separate blockchain. Okay. A proof of work version of Ethereum. People are trying to get free coins, trying to run their own network, trying to have a miner run network where you take out EIP 1559, stop burning fees, send all the money to the miners. There's lots of problems with that, right? And we're seeing, Vitalik chime in on this. Of course, this came out several days ago, but I'll just bring it up anyway. Yes, the potential Ethereum proof of work fork unlikely to succeed, says Vitalik Buterin, Vitalik, however you want to say it. Of course, if you don't know who Vitalik is, he's the mastermind behind Ethereum itself, okay? And let me see if I can find it. Basically, not expecting it to have substantial long-term adoption. Acknowledge there may be a couple splats on some markets in the meantime, but I know that whatever happens doesn't lead to people losing money. I hope that whatever happens doesn't lead people losing money. Yeah, totally. So, I've talked about this a lot on my channel, where I just don't see the long-term viability of an Ethereum proof of work fork. Let's talk about a couple different levels. Number one, do I see an Ethereum proof of work fork being anywhere nearly as adopted as Ethereum or even surpassing it once Ethereum is a proof of stake? That's like the absolute least likely scenario on the face of the planet, that the old proof of work version would be like the new favored ETH, right? That's just not going to happen. The second thing is, would the new proof of work version be used the same amount? That's more likely, but still basically zero. Then it goes is it actually going to get meaningful adoption? Compared to what, right? Compared to Ethereum, probably not, right? We have Ethereum Classic, people use it, but not anywhere near as much as they use Ethereum, right? So it could be a similar situation that way in terms of long-term viability. Now, the much more likely scenario in my mind is that people just use it as fast to just try to get as much money as fast as they can, and then the ecosystem just dies and turns into a ghost town. That's kind of what happens with a lot of new hypey stuff in crypto. You sort of see this, it's sort of like vultures. They just fly in and try to get as much as they can, and then once the carcasses are there, they're out. Everything's turned to carcasses, they're gone. Because there's so many problems with the Ethereum fork, right? What gives Ethereum value is not just the blockchain itself, not the actual software, because I've talked about this a lot. You can get on GitHub and go download Ethereum, right? All right, you can get on GitHub. Here's Go Ethereum. You can do git clone. You could start your own new blockchain. You could change the gas limit. You know what I mean? Make it nice and fast and scalable. But that's not what gives it value, right? I would have to convince a lot of people to run this same software on their computer okay, in order to create a new version of Ethereum. I mean, even then, like you have to have all the apps on top of it, right? So you could go beyond this. You could download Ethereum. You could get the entire state history, like you see on Etherscan right now, and then start, create your own fork. But the problem is you have to get all these people to actually honor the applications and balances that are on it right now. So let's say if you got Ether in your wallet, where are you going to sell it, right? You have to go to an exchange that supports it. And there's not going to be, I do not think ETH proof of work version is going to be unanimously supported, especially not on day one. So what's going to be the incentive? It's going to be for smaller exchanges to support it to get a cut of the trading fees. And then what if you're not registered on that exchange? The people could just go dump the price down to zero before you can register, or it's supported on an exchange that you use. You're not going to be able to swap it on a DEX because a lot of the DEXs probably aren't going to work properly. Any DeFi app that relies upon oracles are going to have issues. And even if you could, let's say the DEXs work properly on day one. Let's say you had a DEX that was just like, just had liquidity, didn't have any issues with it. What are you going to swap it to? You know what I mean? Like if you drop to a stable coin, how are you going to cash out that stable coin? Like it's not like USDC and DAI. DAI is probably not going to work. But let's say USDC, like they're not going to honor redemptions of their USDC on ETH proof of work. That's not how stable coins work. So there's a lot of headwinds for a fork like this to take place. Somebody says staked ETH will not unlock with the merge. That is 100% correct. So that's a common misconception that like people worry about the merge because they think all the people who are currently staking Ether because it's locked up right now. We have proof of stake running. It's on the beacon chain. It's just not turned on the main Ethereum that everybody knows and uses today. That's what the merge is. So you basically take the two blockchains, you merge them together, and that's what creates the new proof of work version of Ethereum. So if you stake ETH right now, you can do it on the beacon chain, but it's locked up. But that's not going to, like once the merge happens, it's not just going to become liquid on the marketplace, okay? There's a post-merge cleanup period. It's going to be months, most likely, before that staked ETH becomes liquid and people can withdraw it and sell it. So following KuCoin's fractionalization of the 10K E and S digits. No, I haven't seen that. So are we turning E and S names into fractional shares? So people are saying they got a notification about it. No, I haven't seen it. Each digit is 1 million. Huh. All right, so yeah, let's go back here and look at a couple other things before we wrap up today. So yeah, definitely keep an eye out for the reports coming out later today. So in terms of the crypto prices themselves, I'm just going to do a quick look at the crypto markets here. Of course, we've seen significant rise over the past several weeks. ETH has basically been on a rocket ship prior to the past couple days. This right through here, all right, was pretty impressive. We basically pulled off over a 2x in a month. Okay, so the ETH merge got a lot to do with this. Of course, I've always said that I didn't think we'd see like ETH's rip off to infinity while we're having some major headwinds in the broader economy, but we still have seen quite a bit of relief pre-merge. Okay, but some things I really want to look at, especially surrounding the reports that are coming out today, is a couple other like larger crypto kind of indicators. So again, I'm not a huge TA guy, but I do watch critical levels. I know lots of other people are watching because that does tend to affect the markets. Right now, looking at this 200-week moving average, okay, because we dipped below this whenever Bitcoin essentially had its, it really at the very least the local bottom of the bad sell-off that we saw here. Okay, so Bitcoin has hit this level pretty much every time it's had like a nuclear dump. Okay, at that. But the important thing to understand is once it broke below it, in most cases, and then got back above it, that was the beginning of a new uptrend. Now it wasn't necessarily the new long-term uptrend that started a new bull market. Of course, we knifed again during the March 2020 dump, but that still was sort of like the indication of the end of this major downtrend here. Okay. A lot of people would say this is the beginning of a new bull market with a pretty significant dip right there. So anyways, if that were to play out again, of course, that would sort of mark a bottom here. Again, I'm not trying to definitively say the bottom is in, but I've been talking about for months on my channel, really since about this period. There have been many bottom signals on the, happening. We've seen so many funds blow up. We've seen so many signs of max pain. That very well could be the bottom. It's very plausible in my view that was it. Now, I'm not trying to say exactly it was, but we could go back and revisit these. But the important thing about this 200-week moving average is, we held it as support. Like we came up, and we're trying to really establish ourselves here. Like we broke above it. We've been above it. Now, I'd really like to see for the price to not fall, significantly below that, right? It would be nice to close around this line and continue to hold that as support to establish a trend in the direction, in the right direction. So that's the level I'm watching out for. The other thing I'm watching out for is the ETH to BTC ratio. Okay, this measures the Ethereum price performance relative to Bitcoin price performance. This broke out of a sort of long-term, resistance line here that was established kind of back in April. Okay, so we're back above that. It means ETH is outperforming Bitcoin. Sometimes when these breakouts happen, you see it try to go to the next level, which would be here, right? Which would be basically right after the last top, right about when ETH reached its prior all-time high, okay, shortly after. So that's sort of like the next stop in terms of where we are on the charts. If ETH were to break that, okay, we can see sort of the next stop from there would be 0.1, and that's putting us a lot closer to the next stop of 0.11. All right, which we're getting into flippening territory there. So that basically means ETH price, outperforming Bitcoin to the point where ETH actually flips Bitcoin and becomes the number one cryptocurrency by market cap. And assuming that ETH can, make the merge happen successfully, navigate the censorship issues and some of the other types of things, like, if we have ETH that is continuing to gain adoption and is burning ETH whenever new transactions are created and is burning more ETH than it's creating, and it actually is deflationary, and we continue to see scalability improvements with layer 2s and actually get meaningful adoption beyond what we have today, like it's very possible that ETH could flip Bitcoin and become the number one cryptocurrency by market cap. And so you can track that. I track it all the time over here at Ratio Gang. we basically need to be at 0.15 for flipping to occur. But just to give you perspective on that, like if the Bitcoin price were just to say the same as it is today, Ether would only need to be $3,700. So basically, Ether just needs to get back to a price that it's been at, before, in order for a flipping to happen. Now, that assumes the Bitcoin price is going to stay the same, which the Bitcoin price is never the same 2 days in a row, basically. You know what I mean? And if ETH is trending higher, most likely Bitcoin's going to be trending with it. But we have a significant amount of price history. Basically, we have months, a few months of price history above that $3,700. Now, that is, of course, that is what most people consider bubblish territory relative to the historical price of ETH. We still have a good amount of price history above that level. Basically, we're not saying that ETH has to do something completely outlandish that's never done before in order for to reach a flipping price level at the current levels. But then again, Bitcoin has to most likely track with it. So, all right. Anyways, that's all I got for you today. As always, smash that like button down below for the YouTube algorithm. Subscribe to this channel if you haven't already. That really helps the videos out so the more people learn about blockchain. And if you're as fascinated with this technology as I am, you want to get your hands dirty, how can you get started today? You can go to my YouTube homepage. You'll find my free courses there. They're like Udemy courses, but they're totally free. And if you like those, you want to take the next step, or hey, maybe you'll take a master shortcut entirely. I can become a blockchain master step-by-step start to finish over at dappuniversity.com/bootcamp. You have to be an expert to get started today. Help people with zero coding experience become real-world blockchain developers in a matter of months. So that's all I've got. Until next time, thanks for watching.